Yeah, because what was this baby up to? Bitcoin get up to 40? Did it get up to 48? What did I miss? Is that where it kind of peaked out at? Up there right around 48. Close to it, right?
Oh, we're right.
Just,
She just went
yep,
down, tapped the daily range already. It's funny.
good stuff. Obviously, we're down here in the monthly range again. Nice monthly range though, especially in the tight weekly. I imagine we haven't even begun to see. Obviously, it started trending down right from up there. What's the price up there? About 47. Yeah, would have been a good launch point right off. But obviously, what's the first thing that weekly needs to be tested, or that monthly?
Yeah, 42.7.
Yeah, you know what? It got tested immediately. Yeah, they're just obviously right. The Bears, we know what they're all about. They're not going to give this shit up easy. This tight weekly range though, very interesting. Especially, we're already we're in Friday crypto trading day, so it's interesting going into the weekend. We really haven't trended as much as you would assume. I mean, you get a tight weekly range like that, this thing's going to move 10K, but hell, it's probably close up and down. Maybe I would imagine though, especially from what I'm seeing on the other charts. Where was I seeing? Like on the daily, bull div on the daily, I was seeing, and nice support on the reverse wave trend on the daily, where everything was looking good. If this wave trend holds on the daily, good things. 43, we could bounce back up to around that. Yeah, what did we get up to? 48. Yeah, a little over 48. 48.2. Especially pretty steep bull div. Indeed. I mean, we're talking 1500. All right. I'll get myself back on track here. So we were talking about the daily, the bull div between returns and price action. Obviously, pretty damn steep too. Oscillator and price action. And with the price action finding support on the reverse wave trend, it is below the 9 length and 33 length variance log moving average though. Yes, and we know they are very powerful. I do like this test though. When everybody in traditional TA, they're looking for these death crosses, these golden crosses. We know it's all foolish. It's all foolish shit that these people are looking at. But when you've got log return moving averages, there's something special. Especially when you got the right lengths on the reverse wave trend, reverse Fisher, you get a powerful bullish cross like this, right? Fisher red, wave trend white. You got tested. If it doesn't hold, this thing is just going to mess with people, right? Hell, we'll drop back down to 30 again, maybe. If this doesn't hold, it's not like we're just going to have a little pullback. This thing's going to dump out again, probably. But I like the support there. Really do. That we got on that wave trend. The 9 length variance log moving average is turning bearish though, but that's okay. That's okay. If anything, we'll get it. Well, it's a nice test, right? Let's see, next few days. It'll be down around 45.5. See if this thing will go back up here. The entropy percentile is expanding negatively correlated though, right? But I do like the entropy itself. It's losing correlation to the downside, right? When it's bright pink, right? The correlation is increasing. When you get to darker color, whatever colors you use on your chart, everybody knows I'm a freak. I got my little pink and blue set up. It's a vision thing though. That's why I use these colors. I see them the best. Tell you what, the historical volatility Z-score on the daily is turning down, right? What is it at right now? 2 standard deviations. Significantly negatively correlated. So if this continues down and this Z-score drops and it's negatively correlated, I mean, that's good for this price action on the daily to get a nice bounce off that wave trend, especially the volatility is expanding. All the APPs, right, especially coming into today, and it's starting to slope up. Remember, when you're correlating volatility, entropy, right, any of these statistical indicators, the slope has a lot to do with it, right? Just like divergence between price action and returns. We know how important that is, right? It's literally telling you the return on your investment is diminishing. These are some things that we do at Alpha Trading, which, other people out there in the world that are attempting to trade volatility just don't get it. They don't get about correlation, right? And they damn sure don't understand about the divergence between returns and price action. It's very, very, very important. And so coming off the daily, talking about the bull div between returns and price action, we pop up on the 2-day where we've got some hidden bull, right? We've got hidden bull. The returns oscillator is turning up off the second standard deviation band. So that's good. And, right, correlation is building. Everything I'm seeing on the daily and the 2-day is actually good. I'll tell you what, entropy just flat on the 2-day. What did that look like on the daily? Let's back this up. That's right. Yeah. The entropy pretty much, right? Flashing. Entropy, it doesn't get any more random. That's why we use entropy and why we correlate that entropy. We want to know when the market's in trend, whether or not it's positively or negatively correlated. Because if it goes into trend and that entropy is positively correlated to price action, right? Price is going to the top side. Vice versa, if it's negatively correlated. That's just what a lot of people don't get with correlating volatility, or say, well, volatility trading's too hard and volatility doesn't give you direction. Anybody that has anything to do with alpha trading knows the system that we've built from scratch, I might add. There's a lot of people out there that might think differently. They don't know who we got. We got some really smart people working and developing these indicators, and we've created a pretty incredible system here. So to anybody new out there, welcome. I've been gone for a while. Jumping time zones, new surroundings, freaked out dogs. Yeah, it's been an interesting journey I've been on almost the last couple of weeks. So yeah, 3-day, hidden bull as well. Return oscillator turning up off second standard deviation band. Entropy on the 3-day, still, the correlation is still increasing to the top side. Entropy is definitely very random though. I want to see on the 3-day. When did we get a 3-day? Ding, ding, ding. Let's see here. The 9th, huh? Okay. I'll tell you what, I don't like that on the 3-day. And that was tough for the 3-day to get up, right? Everybody knows. I mean, this is when we were dreaming hard. We were rejecting off the reverse wave trend, right? The whole way. Every high rejected off the reverse wave trend. Finally got above it. Nice test, right? And then the previous 3-day candle we dumped, closed below it. Got the new one today, right? Isn't it 7? Yeah. So that's interesting. I don't really like it. I'm going to look at the 5-day, but we did get a new weekly. What is the weekly doing? Well, what I did like about the weekly we talked about before is that there was no bear diff between returns and price action. That's good. And where are we? Look at the weekly right now. This is important right now. This week, this weekly candle closes below this reverse wave trend, guys. See you back down at 30, 35, somewhere down in there probably. It's not good. Got to keep it up above there. So what am I saying? When it comes to volatility and statistics, the probabilities are on this holding, in my opinion. Let's see something real quick. And once again, right, here's a couple projections we have going. With the best normal and Laplace distribution projection models available anywhere. Only here, part of the alpha trading system. Let's see here. So we've got PB2 from the 41K low, right? You can see what happened. What happened in 3 weeks, right? We're just nailing the 95.4 Laplace distribution range to the top side. Reject, 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 worked our way down. New lows, right? You can see how powerful these projections are. So people say, well, Bilbo, what's it even all mean? Well, look, 95.4% of the time, this price action is not going to close one of these weekly candles above that line, right? 68.3%, right? There's that range. So not only do you only have a 4.6% chance to break that, you have a 68.3% chance to pull back into this range. This is why when you trade volatility, probability, and statistics, you're very, very seldom on the wrong side of a trade if you understand the distribution, if you understand the divergence between returns and price action. So you can see when I've got this new projection started, 2 weeks, what happened? Bam! Right up against the 95.4 Laplace distribution range. Now we're pulling back to where? Where's price action right now? We're at the mean of the projection from the 41K low. So this is an important area. You want to find the volatility below price action here. And that's where it's at. If it breaks to the downside, here we go. For 10 weeks. Right? Just banging up against it. Doink, 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 rejection, rejection, rejection. And from what I'm seeing on the VRE, so when you got a tight weekly range like this, to be honest, I'm a little surprised considering we're already on crypto trading on Friday, right? Friday trading for crypto, that this hasn't trended more. Maybe $4,000 or $5,000. That weekly range there, that's a $10,000 weekly trend. Doesn't have to be one way. It could be both ways. You can go up 5K, dump it right back out. We did that a couple of weeks ago, if you remember. Bitcoin, this data set needs to stay above this new monthly range. That's what's happening down here. These bears are going to hammer. The bulls have got to defend this area. You close some daily candles down here below 42.7 area, this thing's going to spill down, right? It's going to reject. So we'll see what happens. If these bulls can come in, close a daily candle above the top side, 44.6 area. Let's say it does a first standard deviation run today. That is this blue cross line. We're talking 44.4 area. Close the daily above there. That would be good. Or 44.640. Sorry, that's a 4 hour. Because then we all know how this works. Have been using these indicators. These bulls can close a daily candle up here above this monthly. It's going to make a run for the weekly again and test the bears. And it's tight, guys, $130. $130 weekly range. This trend isn't done. So when you see something like that, you got to pop over on the chart, right? So on the weekly, the volatility is expanding. It is positively correlated. That's why I love the entropy percentile. If you guys have been using this, you know how powerful it is. And it is contracting positively correlated. So the entropy and the volatility are giving me 2 different reads. We are right now, though, setting up hidden bull divergence on the weekly with possibly a bounce off this zero mean right here. If this turns up, Look at the correlation. Correlation's weakening for this return down move. Price action follows return. So the returns is lightening here. Losing a little bit of power. So it is setting up some hidden bull right on the zero mean. That'd be a powerful bounce. We all know how that works out. Hell, you know how those little moves work out if that happens on like a 5 or 15-minute chart. We're talking 5-minute chart, you get a $250, $500 pop, quick scalp, boom. We're on a 15-minute. If you're getting a bounce off that zero mean with some good bull div, bear div, hidden, you're gonna get a nice move, $500 to $1,000 scalp. That's why we love our returns oscillator. It's very powerful when you learn how to read it. Which if you're active in the Discord and you interact, and you will learn. You will learn quickly. You just got to shit can the traditional technical analysis, or the learning curve is massive because you'll keep reverting back to the same stuff that got you into the position most people are in right now. And there's a lot of scammers out there, man. A lot of scammers. A lot of people that don't understand what trading really is, right? There's a lot of people that like, did I do this for a living? No, absolutely not. But I knew I wanted to do this for a living, so I never had to work again the rest of my life, if that makes sense. Because this isn't work to me. Anybody that knows me knows I'm a freak of nature. I am a chart hound. I love looking at the charts. So yeah, I'm excited for my trip to be over. Trading account's about to get funded. Let's see here. Let me look up here on the Discord. On the returns, they're both good, man. And you know I love the 369, the whole 369 philosophy. So I like it low. I mean, I tried it on 6. It was a little quick. 7's kind of a good center point for me. I get more reads. And if you put one on 7, one on 9, you'll see what I mean. And when I'm talking about that, go to the 5-minute. You'll see what I mean. So that's why I use the 7. 9's fine though. Yes, they do. They believe in fibs and moon cycles and all kinds of wild shit. Let me take one quick peek at the 4-hour. Time is it? Doesn't even matter. I'm in La La Land. I can't even see. There it is, 8:30. Good. I haven't even talked about YouTube Jimmy today. What a scammer he is. People say, well, who's that? I'll be like, all of them. They're just one big ball of YouTube Jimmy. Buy my trading course. Buy my trading psychology course. Buy my signals channel. Here's a link to Bybit where you can use 10,000x leverage and liquidate your account time after time after time. It's a joke. Why are we so small here at Alpha Trading? Because we care, right? We care about people. We want people to make money in these markets. And there's a very low percentage of people that are. And the only reason is they take their profit, they limit their losses, and they're never emotionally attached to their trades. Like I've said before, you could use a pet monkey throwing a freaking dart. Red were long, black were short. And if you just take your profit and limit your losses, that monkey's going to make you a lot of money. But if you like to get into the nitty gritty and you want to understand what's going on with the markets, the people that are using lagging indicators. Well, what are lagging indicators? Everything but what you see on my chart. Pretty much. They're all lagging. Why? Because it's all about the distribution. It's all about log returns. And price action follows returns. It's simple. People try to complicate it. If you learn how to use this system, it's very powerful. Why? Because you can literally say, hey, I have an edge. Because if anybody comes to you from traditional TA and says, I have an edge, Run. Run from them. 100%. Right? We've talked about it before. It's an edge, all right. It's an edge of a cliff. That's all it is. They're not profitable traders. I don't, right? We're dealing with the internet. We're dealing with the internet. That's why you'll never hear us. You'll never hear me shilling anything, right? If anybody ever wants to attempt to do this, I tell them to come into the Discord, $10 a month, right? Feel it out. See who's in there. See what our community is all about. See if this is something you want to do. If you want to use the full alpha trading system. But you immediately get a few indicators that get you the basics of volatility trading, which in my opinion, what is the basis of volatility trading? Correlation. 100%. I would have never said that before, but when you've been doing this for this many years now, and you understand how powerful the correlation is, it's the basis of everything. We'd be lost without correlation. 100%. It takes these indicators that are not directional, like volatility and entropy, and gives you direction. Some people are like, oh, well, that's too good to be true, right? So usually it isn't. Well, not in this case, yeah. And I've talked to some people where it's like, wow, can't believe you don't see this, but okay. It's mind-blowing. And they go right back to their normal business. Volatility and entropy is not directional. Well, no, it's not unless you correlate it, but it's okay. It's not the easiest thing to grasp at first, but once you understand, it's just simple. Simple, right, guys? Pretty powerful. If you're expanding and you're positively correlated, price action is going to the top side. If it's negatively correlated, it's going to the downside, right? If your volatility is contracting and it's negatively correlated, price action is going to walk up, not pump, just going to walk up. If it's contracting and positively correlated, price action is going to walk down, not dump, just a nice little walk. But those usually will ebb and flow into something a little bit bigger. Especially say volatility is contracting and you're negatively correlated, price action's walking up, that will ebb and flow into an expansion that goes into positive correlation. Usually those walk-ups start and then you get the pump. Go on the 5-minute chart and look how these little $200, $300 pumps happen. Go to the 1 minute. Usually you're going to get a walk-up. You're going to get contracting volatility, negatively correlated, that ebb and flows right into positive correlation and expansion, into the real volatility push. Correlation, powerful. Powerful, powerful, powerful. So let's drop on the 90 minutes let me do a little workflow. Been a minute. Holy shit, a couple weeks. Yeah, like I just said, I mean, this 4 hour, I'm waiting for this close, which would be midnight my time. I'll probably be up because I'm still on West Coast time. My internal clock is jacked. I want to see what happens with this next entropy percentile candle because it is going into negative correlation, expanding this candle. But the entropy itself, right? It's losing that correlation to the downside, heading back into randomness. That's usually a sign that you're going to get some price action to the top side, especially volatility is positively correlated, expanding. The 4 hour 45.2 area. 45.2. It's probably up here about a 2SD. Yeah, a little high. A little bit below the 95.4 Laplace on the daily. The 4 hours a little up in the air. I just saw those fissures though. Let me go back there. See if this fissure finds some support on that. Those are really good moves. If you guys study this indicator, I mean, this fissure's, there's more than meets the eye. If you have the different length set up, you see this low length, find some support on the higher length one there. That's good. You're talking crazy jewel shit, man. No div on the clean on the 4 hour, clean on the 90 minute. And when you ever hear me say clean chart, it means there's no div. Why do you care about div so much? Because it moves the market. I could set up a chart and I can diagram it up and show you how divergence just is moving the market around. People are like, well, what's divergence? Divergence between price action and returns, all right? That's all it is. Buyers and sellers. Sometimes there's more buyers, sometimes there's more sellers. When there's no resistance from the other camp, divergence is created. There's an imbalance, right? The markets, there has to be balance. It will find balance. It always does. That's what it's all about. It's like this fine balance of Hendrick's gin and tonic. It's wonderful. Yeah, I like the 90. See the 45. And by Monday, folks, I'll be back in form. I'm still in like la la land. This will be interesting because you guys know I love the 45-minute and the 90-minute chart. They're my two favorite time frames when I'm using a workflow to figure out where my scalps are going to be. Where am I putting the full power on my account? Top side or downside? Tell me, right? 4 hour, 90-minute, 45. What are those three time frames telling me that I should be looking for my trades on the 5 and 15? You guys know, like, I'm waiting to see some stuff on the 15-minute. I'm getting my entries on the 5-minute. 90% of the time, limit orders. I hardly ever chase a trade. And usually that 10% is because one of my take profits doesn't hit. So I just market sell out of it, right? Get that profit. That's what it's all about. That's what people don't understand, man. If you have the right tool bag, you can trade the low time frame volatility. You gotta take your profit though. You'd be surprised. It's hard. It's hard to like cut a trade off, especially if you're like, oh, but man, it looks like it's getting ready to explode. See, that's that dumbass that lives behind your eyes that starts talking to you that wants to lose money. So what am I even talking about? I'm talking about taking profit. Where? Distribution levels, price action volatility ranges. That's what this chart is for me. Not only letting me know what the overall sentiment between the bulls and the bears are, who has control, where's all the volatility? Is it above price action? Is it below price action? Means a lot. So this 45-minute, all right, we had a cross down, wave trend cross down the Fisher a while ago, earlier. This needs to be broke, right? I love the 45-minute because, I mean, like right now, hell, it rode down the 9-length variance log moving average the whole way. Got up above it, boom. Then it gets stifled by the 33-length variance log moving average, reverse wave trend. We can close a couple, maybe one or two 45-minute candles above that 44K area, right? So 43,841. Get up there about 44 though. Close a couple up there, make a run to the reverse Fisher. But right now, trades are interesting from what I'm seeing. I got a dog freaking over here. Hey, man. Dude, go lay down, you madman. 44.5 for the 90-minute reverse wave trend. So I'm gonna immediately, right? I'm gonna bounce over. Look one more time. That's right. It was a clean chart. Was it clean on the 45? Actually, yep. No div. Real unusual. 90, 45. What about the 15? Little bit of bull. Just popped. First it was hidden bull, then a little bit of bull. Those were the two 15-minute candle, little bullish candles. 5-minute. Yeah, right now, from what I saw in the 90 and 45, I need like a 4-hour close for sure, 100%. It's a little, damn, there's another chart. Actually, I mean, you had some bull div on the 5-minute, I think popped, didn't set up any bear, right? It all starts on these low time frames. And look how long this thing's been dicking around the wave trend and Fisher, right? Everything's super tight. So first thing you notice, I mean, you can't get by this area, right? If you can't get by the power mean band, reverse wave trend, reverse Fisher, the variance log moving averages on the 5-minute, you damn sure aren't getting through on the 45 and the 90. So that's what we're looking at right here. This thing could actually super tight daily range too. We all know what that means. It's literally $75 daily, $130 weekly. This is probably going to be a big day, big trend day. So then I'm hound dogging the charts, trying to figure out. Obviously, now my trading is a little. I'll be more that 8 a.m. Eastern through that 8-hour period, probably. Those 2 4-hour candles. That's when I'll be trading. Maybe even the last 3 going into close. Let me read this chat. Okay. So, like right now, with Bitcoin's data set below the center of the monthly price action volatility range, and then you got a tight weekly above, all the volatility is above price action. And when I say that, I'm talking weekly and monthly. I'm always talking about the weekly and monthly price action volatility ranges. And another thing I'm seeing too is that the 4-hour deviation levels, normal distribution, 5 different standard deviations are almost crammed inside the daily 1SD. We all know what happens when that happens. You're getting ready to get a freaking volatility eruption. Happens every time, especially with the tight weekly, tight daily. Today, this thing is going to move. But that's what I mean when all the volatility. I'm looking at like, where's the weekly range? Where's the monthly range? That's what I'm looking at. Because it's just like a lot of people like to use the VPVR, whatever the hell that thing is, where it shows the nodes, the volume nodes and stuff. I give a shit about volume. I care a lot about volatility. That's what I want to know. Where's the volatility? Right now, it's above price action. Whoever wins this battle, if we can get these daily ranges up above the monthly, that's the first step. New month. Got to get these daily ranges first above the monthly. Maybe we can do that the rest of the day and tomorrow. Or actually, we're on Friday crypto day, so all good. But then you got to get them above the weekly if it hasn't already expired. And you know what could be good, to tell you the truth? I mean, if this thing closed right now, the weekly is going to be above the monthly. I'll tell you right now, by the end of this weekend, it behooves the bulls to close up above. I'm going to even go 45K by the end of the weekend. Because then you're going to have a weekly price action volatility range below price action, and the weekly is going to be above the monthly. It's going to be a beautiful thing. That could be a launch point. Especially, I don't even have to say, the daily will be above them. That's what we're looking for. Daily above weekly, above monthly. Bitcoin's been known to take a shit on that plan before, though. When it gets set up perfect like that, and then just boop, algo's going sell mode. It just distribute over all the retail traders nonstop. Limit selling right into their market orders of all their hopium, all their dreams. Yeah, that would be good. It'd be nice today, Bitcoin to close above the 1SD. 44,638 right now. Let's pop this on a daily real quick. You see something. Yep, that's exactly what I want to see. If that's a perfect spot. This one, though. Let me move the PB2 up a couple. That's interesting. Nothing just float. More sustained move, though. Put this on the 18 real quick. Yeah, that's interesting. This is a good place for a bounce. I'm telling you right now. I mean, from the projection back here when it took off from right around 41. What is that? 2.5 weeks ago, probably. Ran up to the local high, 48.2. Almost made a run to the 95.4 Laplace. Kind of got shut down. But look where it pulled back to. Look at that wick. Pulled right back to the top side of the 68.3 and the 95.4 of the recent, right? Of this recent dump, last 4 days. That's good support right there. Coming from the distribution, for sure. And why do I say that? Well, there's a 68.3% chance from this projection, Bitcoin's data set gets back up here, right? Into this range. And from this projection, 95.4 is pretty high. Yeah. And remember, I was talking about on that weekly breaking those levels and heading towards that 60K level. Let's see what happens. I don't know. All right, it's Bitcoin. It is Bitcoin. I do like the way this daily looks. You see, that's a real test. The bulls are like, we're going for it. Get a nice cross. Wide price action's going sideways. Bears dump it out to test that wave trend. Which, what else is right there? See, that's what you have to look at all your tools. And it's bouncing right there. It's in the monthly range. This is a good area to grab some liquidity and take off again. We'll see. If it doesn't, this baby is, let's see where some monthly levels are down here. There's a first one at about 39. This will be interesting. Let me see real quick. Go to a weekly again and see what price action would have to be to create some div, or where it could go down to let this hidden bull still play out. Oh, it's got a lot of room. Oh, it could go down here and test the 9-length variance log moving average at 40.2. Set up some real strong hidden bull div. That's interesting. And at a weekly. Whoops. And at a weekly, right? We're right at the reverse wave trend on the weekly. It's a lot of stuff. And you got this monthly range. And so what am I saying? I'm telling you, these bears close this thing below this monthly. Oh, there's a shit ton of really strong volatility. Bulls are just like nothing to live for, because it'll probably dump out again. That's why this is an important spot from what I'm seeing. Very important.
Have you ever checked out Bitcoin's logarithmic growth curves?
No. Have not. You're seeing what I use. Pretty much my main trading charts. To me, it's just all about distribution, all about volatility, the divergence between price action and returns, and especially when you go to low time frames, you'll learn how to read that stuff. Very powerful. I mean, you can throw these projection bosses on a 5-minute move, and you literally know where to take profit, where the probabilities are on your side.
Well, what's your question about the curve?
No, I think he said, do I use it?
Bitcoin supposedly follows logarithmic regression. Here, I'll show you guys.
Oh no! I've seen it. I know what you're talking about. I think you've seen it too, Bilbo. It's that one that you always see on the TA. Yeah, there you go.
Yeah.
Do you want? Have you ever made trades off it?
Yes, because I basically know that because of how this curve is set up, you really can't dump to zero that easily.
Right. So you've made trades off it and they worked out?
Yeah.
All right. Well,
use it. I was still doing TA at that time, so I did a bunch of shitty trades after that, and I blew up all the gains I made during that period.
Yeah. I mean, to me, all that does is it just kind of tells you, hey, it's you're seeing Bitcoin's trend over the long term, and great. Other than that, I mean, I'm not making trades off that.
I only use it when it's in its extremes. That's when I take notice.
Yeah,
when it's
yeah,
in the middle,
yeah, and I think that's okay to do that. You could look at the extremes, but you're going to go down to your volatility charts, and you're going to really, hone in on that. And so what? I mean, that line could break. There'll be a day it'll break.
Yeah, but a total collapse of Bitcoin itself is.
Well, I don't know about that, but could break to the upside too. You don't know.
Let me see.
My point is, it's just a tool out there to, based on logarithmic math, and it's fun to look at. But I don't think anyone's that understands volatility and all that. They're not going to make trades off of that. They're going to get down to the smaller, lower time frames.
This is the only log curve I follow. The Laplace or the normal distribution.
Yeah, right. Yeah. There's your normal. Yeah, you were asking about normal dark. Thanks, Sol. You were asking about that yesterday, and Bali was famous for saying that, right? There's other people that say it too. Yeah, the markets don't follow normal distribution all the time, but look, there's sometimes it does, right? So what's that tell you?
It's more Laplace these days.
Yeah, there's more Laplace. I mean, it's both. It's just different times. It's whose bots are winning out at the time, right? I mean, you can see it. Something's following it at times.
Oh yeah.
So
Oh yeah.
Interesting.
Yeah, it's the projections are powerful. Whether it be, I mean, and is what I've noticed, daily candle distribution levels, normal distribution plays a much bigger part these days than it does in an actual projection, right?
So,
Unless you're doing,
do you have a contingency plan? So, like, what would you do when the thing breaks through all of them, like every single one?
that's what's great. It just doesn't happen.
It doesn't.
And that's when you see that, no, man. Look how big the distribution is. I mean, that's normal distribution. That's just the bell curve. So you've got a 99.7% level that is massive. We're talking like, hell, Bitcoin's at like negative something at the bottom
one
side.
It's very interesting.
Because what it is, it's just all about probabilities. Like right here, when Bitcoin took his run at September 2015, $250.
Oh, wait a minute. You're using a monthly chart. I thought this was something lower.
Then you get this run up to 20K. And here's what's interesting. You get a wick by the second standard deviation band, but the wick goes directly to the dollar to the third standard deviation on that monthly candle. That's a hell of a move. When Bitcoin does a 3 standard deviation move on a monthly candle, it's party time. Everybody's making money. Even the dumb fucks, right? In a bull market, everybody's making money.
Confidence. I mean, that's why they're all using Fibonacci's and crap, right?
Yeah. But you got to know where to take profit. That's the big thing. Like what I rode this whole month candle up, hell no, I was probably in who knows how many trades during that monthly candle. Especially look at that pullback. It pulls back where to? Right to the second standard deviation. The second standard deviation, there's a 95.4% chance price action on that monthly candle was going to close above there. So it ripped up to the 99.7, pulled back right inside the 95.4. But here we go. If we just go back to I mean, this is how, like, not only am I, because when I do trade, it's intraday, but I'll look to these macro time frames to kind of get an idea. Okay, where are we? Where are we at these projections? And when you're on a weekly projection and you're hitting a 95.4 Laplace distribution range, there's only a 4.6% chance price action is going to break that level. It's way more likely in a 68.3% chance it comes back down and tests about 40.2. There's that number again. That was on another chart.
So in this case, we would be better off shorting the thing until it gets set up.
Yeah, I don't know. That's why I trade. Intraday, and every day is different. It'll tell me like what I read off when I start an intraday trading. It'll always be at a 4-hour candle. And between the 4-hour, 90-minute, and the 45, I'll get an idea where I'm going to allocate the full power of my account. No leverage. I don't use leverage. But if I have 3 Bitcoin in an account and the 4-hour, 90, and 45-minute are telling me topside trades, all 3 Bitcoins, every scalp, are going towards that trade. And when you're dealing with Bitcoin and you can get, if you're getting entries on the 5-minute, hell, you can get 10, 15 trades a day. It can be very profitable. But people don't know where to take profits. That's where this chart comes in. There's so many different profits, especially today. And this thing is going to trend.
It's only for profit taking, right? It's never for entries?
Very, very, no. Usually not for entries, but sometimes it'll sway my decision on what I'm going to do. Like this little 15-minute drop right here, probably a good scalp on the charts, I imagine. Look, you get a rejection off the top side of the 68.3 Laplace distribution range. That's the white cross line. And where's it end up? Right at the bottom side, 68.3 Laplace. So if I'm looking at the charts and I see bold div or something on the 5 and 15 and I see this
I
getting
was just going to
close.
say that. I was like, you know what? If Bilbo sees bull div forming and it's going to be on one of those, one of those, he's going to take it for sure.
Oh, yeah, 100. That'll sway my decision big time. If I see bold div on the 5-minute, 15-minute chart and this thing's dropping down, getting close to the 68.3, I'm like, what's this thing about to do? Probably going to pop all the way back to the top side, which it did.
A time where it didn't work. I'm just trying to.
No, it works every time. The question is how far is it going to go, in that opposite direction. So no one knows.
What it's really about? It's really about taking your profit because you're going to be right,
and that's
the majority
of
the time.
Man, I'm just too used to being wrong. Gosh.
But it's a powerful way to trade. The biggest problem people have is getting their entries. Before they know it, there'll be a few $100s right underwater immediately, and they're using leverage, so it's probably close to their liquidation point too. It's a nightmare when you use leverage. If you don't use leverage, it's butter because you limit your loss. And you said, does it ever not work? Sometimes, but I immediately get out of the trade. Like right here, this 15-minute candle takes off here. If this second one starts to dump down, I'm getting the hell out of the trade probably. But I'm looking at entropy on those low time frames too. I want to see if it's like popping into a quick trend. That's what's great about the tools. That's how it all works together. Volatility, entropy, all these volatility and distribution levels. It just takes a while. Give yourself some time.
Yeah, and those divs, like I say, they work out. Like, I mean, you don't want to say 100%, but it's darn close to it. But the question is, how far, in that opposite direction is it going to go? And like Bilbo said, I mean, I think it could turn around the next candle and dump, right? But if you would have taken your profit and on that div, who knows? It could have been $100, could have been $300, could be $500, could be $1,000. We don't know. You never know. No one knows the future. But those things tend to play out. And if you take your profit at some level that you deem that's valid, then like you said, if it goes against you, you get out. But more often than not, you're going to be able to take your profit.
And people ask me, well, where do you get out? And it's like, if I get an entry, I can almost guarantee a very high percentage of the time, it's going to move in my direction. But does it stay sustained?
Right.
And if it doesn't, and it drops back down to my entry, when I talk about limit my loss, I seriously, when I don't do it, and MJ knows, you have no idea. I'm off the hook. I'm just losing my fucking mind because I did not immediately get out of the trade. Like 95% of the time I do, but for whatever reason, there's been times where
once in a while,
oh no, this is a great idea. And then you lose a couple grand and you go, okay, let's shake it off. Insane. But I consider myself a professional trader, not because I work at an office, right, with a bunch of stiffs. It's because I follow the 3 rules. I'm not emotionally attached to my trades. I take my profit and I limit my loss. And because of that, I usually have a very high P&L. But if you follow that simple rule, for crying out loud, like I said, you can use a monkey throwing darts, man. The monkey says, go that way. Whoops, wrong idea. Get out of the trade. Lose a tiny little bit of money. But, because in the end, it's all probabilities. It's a random market. So think about just how fruitless it is using lagging indicators trying to trade crypto. And people are like, well, swing trade it. Well, now, if you want to just go buy spot and just sit on it, those are the people that are going to end up making the most money, probably, because 90% of traders they have no clue what they're doing. They're going to lose money in good markets. They lose money because of leverage.
Yeah,
You
and
can't
and number
swing
of
trade.
occurrences. Number of occurrences. That's important. You know.
Yes, 100%. One thing old Knuckle in the other, in the other camp. Always used to fucking drill into my head. It's all about the occurrences. And I'm like, yes, it is. Big time. But can you imagine if you don't know what's happening? You're using lagging indicators. You're trying to trade these random markets. You have no clue about entropy. It's rough, man. It's rough. But you don't hear us out there just barking, trying to steal people and we're not like actively seeking. Give a little spiel at the end of the videos. Not trying to sell anybody anything because
Hear me?
bottom line, people that don't want to trade volatility, probability, and statistics and learn how to take profit, you're on the other side of my trades. That should frighten you when I'm in fucking kill mode. Not to toot my own horn, but when I'm active and I'm trading, it's fun, right? We all know this. It's all about getting entries and taking profits. So we're not trying to recruit anybody. If you happen to find your way to our Discord, though, there's a reason. I would stick with it. I really would. Be on the side of the algos. Be on the side of the algos.
Valley legitimately blocked me from buying his indicators ever again. So I literally have no choice, even if I wanted to go back.
Well, we got a news flash for you. Our math guy makes him look like he should be freaking changing tires, in my opinion. And coding,
Exactly. I would definitely like to talk to him at some point.
his coding is disgusting. Donnie's he's our code Nazi. He makes sure everything is correct.
And welcome to the club. We've all been kicked out. So.
Yeah. We can care less either.
What's that movie? The Land of Lost Toys, that Christmas one.
Oh yeah. Misfits. The
Yeah,
Misfit toys. The island of misfit toys, man. But it's like, if you take some time and learn how to trade like this, figure out how to create a workflow, a real edge. That's what cracks me up. And I've been into it with so many people, it's ridiculous. Like, well, my edge. I'm like, show me. What's your edge? Trust me, I'm not going to use it. You don't have to worry about that. But they'll never show you. They'll never show you. They'll never show you their P&L. One guy I got to show his P&L. It was 0.38%. Something. That's a winner in their eyes.
If you had like $38 million, sure, maybe.
If you're winning 4 out of 10 trades, that tells me immediately, number one, you don't know how to trade, so you're probably using leverage. So you're getting liquidated. Your profit and loss is definitely, you're not in profit. You're not making money, but they make it appear like, well, no, look, this is hard. I won 4 trades. It's like, okay, whatever. It's all good. These people try to swing trade volatility. You cannot swing trade Bitcoin. I'll argue that point to the end of the day. I'll let somebody swing trade Bitcoin and use leverage, and then I'll use no leverage and trade the 5 and 15-minute chart. We'll see who comes out ahead. You can't swing trade it. You'll get liquidated, especially if you're using leverage. Like I said, if you just want to buy spot, knock yourself out. But if you want to go 50x and freaking long futures and shit, people don't even know what futures are for.
Oh my god, I'm a Bybit degenerate, man.
I know. Hey, I trade the futures.
Yeah.
I trade the futures.
We all been there.
I just
That's why
don't
we
use
know this.
leverage. I don't use leverage. Yeah, it's not like I'm buying spot. I know I'm longing, I'm shorting, I'm freaking playing the futures. But futures are there to hedge options positions. People are like, oh, what the hell just happened? You get these violent moves in the futures. People need to understand how big the options market is. fucking massive. They move. Their money moves shit if they need to. If they got to push price action in a direction to cover their positions, or buy the underlying, which is the futures, dude, that's when you get crazy volatility in the market. It has a lot to do with options. Now
Wall
that
Street bets, man.
and I will be opening a couple brokerage accounts now that I have a permanent address again.
Now
to
we can't be held liable. Once in a while, we see a really good opportunity, and a little 2x gets real exciting. Okay, but anything more than that is playing with fire.
Here's the problem with leverage. It throws a red flag up in their system, right? Especially these people that are using high leverage. Don't think these exchanges are not trading against their customers, because they are. And think about it. They can see your entries. They can see your take profits. They can see your stop losses, which we don't use. It's in my head. Why the hell do I want an exchange that knows I have a massive winning percentage and they are out to get me? And I've seen it where it's like, why do you want to let them know where a stop loss is? Keep it in your head. Monitor your trade. These people that swing trade, okay, let's see. Where's the ATR? I'm going to drop a couple hundred below that. That's where I'm going to put my stop. And look, it's below that data set over there too. And we know how that support and resistance works really well. And they put these stop losses in. They get stopped out. They might not get liquidated, but yeah, it's crazy, man. I don't know. This one's running over 918. You guys, I have good internet. You're in fucking trouble now. I'll be doing 2-hour streams like all the other YouTube Jimmies. But that's enough about the market. I can tell you with 100% certainty, Bitcoin is going to go up or it's going to go down. Look at the nice bounce, though, right?
Wow, man, that was epic. Epic prediction.
Right.
Yeah, I
Yeah.
had to ask something. This I've been wondering for a while. Can you use these on new cryptocurrencies like Zilliqa with like lower samples? Like, can they still
Yeah.
work?
Oh, yeah. Zilliqa's been around a while. The problem with now, if you want 5-15 minute charts, then that's all you're going to get on new cryptos. There's not enough history for. That's why I don't trade them. I'll tell you what I look for. Instead of looking at the actual charts of new cryptos, I want to know if they're correlated with Bitcoin. So I'll correlate their data set with Bitcoin's data set, and if it's positively correlated, if it's something that's like, I don't know, a buzz on social media or whatever, and I see Bitcoin getting ready to take off on a scalp, I might scalp that one long too, because it is correlated with Bitcoin. New cryptos, that's more powerful to me, just knowing the correlation to Bitcoin, rather than what their actual charts are showing. Yeah, that's how I do that. But you can use it on, anything. Kids are trading Pokemon cards. Can run a distribution on the little neighbor kids. See what's going on. Yeah, they're good for anything. And if you're talking about you take these indicators over into Forex land where let's be honest, it's very fucking predictable. Go dog.
I mean, you can just
It
follow the economic calendar and then make a lot of money in Forex. My friend's done it.
there's
Yeah.
the problem is that's where you go to these exchanges, these Forex exchanges, they're offering 500x leverage because there's hardly any movement. So these people are like, oh, well, I can make money using leverage. But then they get shady, they get fucking liquidated. But if you intraday trade and have a big account, you can make a lot of money using these indicators, trading Forex for sure. Those
Mainly,
are,
I don't have a big account, so I'm almost forced.
yeah, I mean, not really. That's the thing. People
But
think they're
mostly for
forced,
capital
right?
efficiency, to be honest. That's what I mainly use leverage for.
Right. It's just, in my opinion, it's just better to just take your time and even if it's over a year or two, slowly building an account up to where, okay, now I got a Bitcoin in there. And during that whole time, you've learned a shit ton. So by that time, now you got some firepower. And when you're scalping, $200-$300 moves on the 5-minute chart, you can use a whole Bitcoin. You're making, right? Making $200-$300. It's nice. So why Bitcoin was going to go down. I mean, the people that really trade the low time frames, they're not using traditional TA. It just the lagging indicators. You just can't. Number one, you can't get the entries. The divergence isn't there. It's
I've
really
seen people
hard.
use Fibonacci on the 1 minute. I've seen
Yeah,
insanity, yes.
they're probably living in a van down by the river now.
To answer your question too, I saw in general you put a question about Ichimoku. Could you like convert it to volatility or whatever? Well, if you know how Ichimoku's calculated, right? It's calculated based on price levels, right? And then divide them by 2 or whatever, highs and lows, and it's based on price. So that's not going to work because if you're converting it to volatility, it's not the Ichimoku anymore, right? It's because it's not how it's calculated. So it's not based on volatility. So hopefully that answers that question.
Yeah, so you had to like completely revamp the entire calculation itself.
Yeah, if you go on, just go on Investopedia, you see the calculation. It's based on price, so it's not.
Yeah, I kind of realized it was a stupid question. I would have deleted that. Damn.
No, that's fine. Hey, that's how we all learn.
You're not gonna ever get chastised here for asking any type of question. This shit is not easy. Then you got the dictator over there giving everybody shit, reaming their ass, telling them they're morons. It's like that.
She expects you to be like university level at the very beginning the moment you enter there.
Yeah, and
but you know what it is. At the end of the day,
they don't trade.
Yeah, they don't trade, and that's the thing. They don't
That's
trade.
the bottom line.
Yeah, and like it's just you can know all the math in the world, but what are you going to do with it? Great, okay, you made some great indicators, but if you're not trading and using them and teaching people how to use them and coming up with a system and a strategy that works, well, what are you doing? I mean, all you're doing is just making indicators, and you're really good at math. Okay, well, thanks. I don't, whatever.
Yeah. Okay. We got a good math guy too.
Right.
We're cool people. So see ya. We'll do another one tomorrow, 8:00. Definitely don't put this on YouTube.
No, absolutely not. I'll chop it up, see if I can get something good out of it.
Yeah. It's like I'm still in party mode, drinking gin and tonic.
Right.
I just want to ask you about a particular indicator.
Yep.
The ALR.
Yep. Let me pull her up. You know
I'm just
what?
wondering how you use it, since I'm still kind of confused how to apply it to my strategy.
I will show you. Where are you? Boom, right on top. Actually, I don't know why it's still not on this chart. I'm going to save that to it. So, this is just the returns, right? So this is the returns, and then there's 3 standard deviation bands around the returns. It's really good for divergence, especially on low time frames. But that's pretty much is what it is to me. It's another tool for divergence between returns and price action. That's why when you come in at the $10 level, you get the ALR, you get the AVP, and you get the Pearson. Then obviously volatility quality. That's just open source on TradingView. But this is good to use for. Let me drop this down. Hey, I know you're hungry. I'll feed you in a second. I'm playing with my magical internet friends. Go. Let's see. Yep, boom. There's a good example. So here you've got some bearish 15-minute candles coming down, all right? But the returns each time are higher lows. And then boom, you get a pop. Boop. It's just it kind of shows you what the returns are doing compared to price action. Which is can be very, very powerful. Like
so what
right
I'm looking
now.
for is like negative returns weakening or positive returns weakening.
Yep.
Yeah,
You can say
exactly.
that. Yep.
And like right here, you get a 15-minute high on the data set, right? And here's your bullish return candles. Never got past first standard deviation, but then you get this big pump we just had on the 15-minute, right? Or not big pump, few $100 up. But what did that create? It did nothing more but create hidden bear div. So I wouldn't be a bit surprised. Man, there's not a good place to really start a projection. Kinda. Let me see here.
I'm still kind of horrible at spotting hidden divs. Like, how do you easily classify one as a hidden div?
Here, let me change this real quick. What was that? 10? Yeah, boom. So you start to get this down move. 95.4 Laplace, right? So 95.4% chance this down move on the 15-minute was going to pass this area. Then you get that bull div, returns price action, boom, get a pop. Right back to the bottom side of the 68.3. So yeah, interesting. But so divs, like hidden is where you have a lower high on price action data set. So here's the high on the data set. Here's the high on the data set. Here is high on the returns candle. Higher high on the returns candle. So you got a lower high on price action, higher high on returns. That's hidden bear. Where it plays out to, it's hidden divergence. This could be the play out, right? $100, $80. And find support inside the 68.3 from, well, no, hell, what am I talking about? It's not even, actually, let me see what this looks like. This is where you're going way down the freaking volatility degen rabbit hole right here. You're having a good old time. You're running multiple projections on a 15-minute chart. What was that?
Oh, well, what is that white line in your cones?
Just the mean.
That's the mean. Two more.
Let's see.
Let's see. Boom, boom.
So how do you guys use the mean?
Well, when you're statistically having an outlier on your deviations, where's it going to go? So what are the odds? The odds are it's going to revert back to the mean.
I see. So in this case,
Yep.
It does the opposite direction.
Yep.
And we're talking about returns, right? The returns will always revert back to the mean. But what follows the returns? Price action. That's what's great. That's why the indicators are incredible. They're not lagging. They're all built on the returns.
No, and
It's
a lot of times
it's just that I just keep drawing comparisons, man.
Well, no, but when you say that you think the indicator's laggy, it's usually because you're looking at what happened on a certain time frame and you didn't go to the lower time frame to see where that reaction was happening or what was going on. Because if you're in a higher time frame, I mean, you're not going to want to take a trade, necessarily on a higher time frame. You want to see it, something building, and then you want to go to the lower time frames, and that's where you're going to see the action and where you're going to want to put your entry.
Damn, I feel like an idiot. My entire life is a lie. What I've done this entire fucking time was take trades off of the 4 hour and 1 hour.
Yeah.
And sometimes one day. Yeah.
Hey, we all been there.
Yeah.
Trust me. We've all been there.
No,
there is an industry-wide scam going on that people don't realize.
The hardest thing, I think, with this volatility trading is it's it's getting to know the indicators and your strategy well enough that you can see it forming the potential in real time. That's the hardest part for me, anyways. Anybody can see it after the fact, I mean, you can watch many of the all these videos, that are done. Bilbo goes over everything, and it's easy to see in hindsight, right? Everything, but
Yeah.
it's learning it well enough to recognize in real time when the divergence is happening, and then having the balls to put the trade on, right? I mean, and that's where your head comes into it, and that's the hardest part for me, anyways. It's being able to recognize this stuff in real time.
That's when you asked earlier, does it ever fail? It's like, that's why when I'm getting entries, I'm freaking using all my charts.
Yep.
So, for confluence.
Whereas many, in my case, it's as many as my brain can handle. Bilbo's got a bigger brain than me. I can't handle
I just work harder. So somebody in the whale Discord was like, I think Bilbo's the smartest guy in here, and I'm just laughing my ass off, right? You know my story.
Right.
It's like, yeah, no, brains weren't it. It's that I guarantee I outwork 95% of people. So it's like, those are the people that get ahead in this world. It's not about being smart. It's about outworking them. Like, I've had people don't even want to listen to me because this is not what I did for a living. Why should I listen to you? I'm like, well, because the guys that do it for a living are scamming you. But hey, do whatever you want. Yeah, boy.
Yeah.
And that's the room they leave us in. Yeah, we're just looking at all this divergence. It's all over the place. There's that div everywhere. At least I'm out of the deep forest now. With at least all the pine trees where I would see div in the trees because I'm a psycho.
Dude. I see triangles in fucking everything.
Yeah, right. Yeah, you get I know what you mean.
Yeah, you can shit can the triangles.
You look at that traditional TA stuff and you start seeing it everywhere.
I even saw triangles in HVP once, and it was scary, man.
You hungry, big dog? Yeah, I'm gonna get off here. I gotta feed these dogs.
I gotta roll too. Yeah.
Yeah, cool. Yep, we'll see you guys tomorrow.
Yep.
8 p.m. again.
Later.
All right, later.